If you are new into SMC or still confused, this video will be for you because in the next couple of minutes I will show you basically all you need to trade smart money concepts successfully. I'll break down each SMC component in simple terms and give you the mechanical system, so by the end of this video you will know how to trade properly. Just for context, I've been trading for about 8 years now, and no matter what concept you choose, a lot of things, if not the most, overlap, meaning basically there is nothing new under the sun, just different understanding of the same price action. Now we can split SMC into 6 parts. The number 1 is to understand the market structure properly. I'm actually working on in-depth video regarding to this topic, so feel free to come back to my channel in the next week or so. You can see way too many structures in the market and it's too chaotic. My advice, just ignore all of them except one. That's literally all you need. Once you're skilled, you can add one more structure for extra precision or confirmation, but for now I want you to focus only on one particular structure. Do not get confused, focus always on 3-point method. 1 point will be the origin of pullback, the second one will be after this point is broken, and the third one is the extreme high or low between these two. Now we have 3 points. Now you have the structure, rinse, repeat. To understand it even better, we need to know BoS and ChoCH. Break of the structure is our second point from 3-point method. And that's pretty much it. BoS is to show us that the trend is likely to continue in the desired direction. On the other hand, if we see our extreme high or low, aka third point, to be broken, that's our change of the character. You can think of it as a first sign of potential reversal. Also keep in mind, it doesn't necessarily mean that we will reverse, but chances are increasing. To increase the probabilities even more, we need more confluence. Liquidity grab or liquidity sweeps are essential to SMC concept, and I use this logic like every single day in my own trading. Mark significant high or low and wait for a couple candles to close. If you get a candle close above or below a very important level, this is usually your sweep, but also you can get a strong close through the level. But then if you get a strong opposite candle close, that is also considered to be a liquidity grab. Eventually think of it as a key level that price needs to trade through before making significant reversal. FVG, aka fair value gap or imbalance if you will, is a rapid move in one direction, leaving imbalance in the market that is likely to be revisited in the future. We actually don't know when it's going to happen, but with other contexts we can use it either as a taking profit level or POI, aka point of the interest, where we want to take a continuation trade. I'm gonna get to it later on. Order blocks or supply and demand are simply areas with big point of the interest. Before price make a big move, it usually consolidate first. That is pretty much your POI. OB, aka order blocks, is usually that candle before the move. For the S&D zones, you can think of it as a series of candles. Also, you can think of the whole area as an accumulation and distribution zone, which you might heard from the Wyckoff. Now, what can be also very helpful are premium and discount zones. Once you get your structure and you understand the bias, meaning direction of the trend, you can measure the move by using Fibonacci tool with basically 50% level. For PD zones, you need highs and lows of the recent trend structure. We should only consider to looking for a long setup in discount zone and avoid trades that are basically in a premium, and vice versa for the bearish scenario. Even though this is a great mechanical tool to use, I don't personally use it at all, but for someone who needs to get a proper mechanical guidance, it's a great tool. Okay, now how the hell do I trade this? It's actually simple because you don't need to follow literally everything to make a good trading system. Basically, a rule of thumb is to keep it simple, stupid, and focus only on 3 things. If you find it confusing trading reversals with ChoCH, change of the character, just avoid it and maybe focus on FVGs with strong market structure. For example, wait for break of the structure, mark the high and the low, and trade fair value gaps or imbalances in the discounted area for bullish continuation. TLDR, find 3 components that make the most sense to you. My personal approach is to look for significant levels of highs and lows, and I will use a liquidity sweep as my main tool. I also like to use imbalance, aka FVG, either for taking profits or confluence for my TP levels or for directional bias. And also speaking about the bias, I like to use accumulation and distribution zone, which you might already seen on my channel, to structure better my overall trading narrative. If you want me to make a step-by-step video for a trading system, just let me know, but I wanted to make this video as much informative as possible in the shortest time possible. Just remember, no matter what trading system you choose, always, and I repeat always, if there is something I learned in my trading career, is that complex system is very difficult to trade in the long run, and the most successful trading friends that I personally know been using a very simple stupid system. So choose 3, make it very simple, and I'll see you next time.